we're just going to get a quick comment coming in on Bajaj Finance. The second quarter numbers, as we were just discussing, more or less in line. The NIMS has held up while the net profit came in a little below street estimates. Shweta, the Vice President, Diversified Financials at Elara Securities, joins us on the show. Hi, Shweta. Good morning. Thanks so much for joining in. Well, how do you read Bajaj Finance's numbers? What were the key positives and where were the misses out there?
Hi, Nigel. Morning. So Bajaj Finance numbers overall prima facie looked pretty healthy and strong, largely corroborated by the fact that now the growth run rate is on the higher side. So earlier we were estimating sort of 28-29% growth, and now our CAGR is tweaked higher to 33 odd percent. So we believe, and especially now that auto financing, SME and mortgages are back in reckoning, so we believe the growth run rate remains strong. However, on the negative side, margins have come under tad pressure, but as clearly management also confidently mentioned that operating leverage benefits would continue to sort of offset the NIM pressures even going forward. So net-net, you will see healthy sort of rich return profile for Bajaj Finance, closer to 5% ROEs and post-dilution ROEs remaining around 21-22 odd percent. So overall, a good set of numbers for Bajaj.
Okay, good set of numbers for Bajaj. If you map the trajectory of the stock, right, Shweta, from the month of March, Bajaj Finance was what, at 5,700. It's had a huge ride. It's almost at 8,100 now. How much of the good news you think is already in the price, or do you see more upsides for the stock?
Yeah, Sonia, so you're right. We saw this even back in 2019. So whenever there has been a capital raising that has happened for Bajaj Finance, the stock has re-rated. So as you rightly pointed out, most of the positives currently are priced in, and going forward, the NIM trajectory should anchor the momentum ahead. We clearly mentioned that the stock momentum now on should remain slightly range bound, the kind of rally we have already seen in the stock. But yes, the NIMs, the incremental credit cost accretion that we see going forward will sort of guide the momentum ahead.
Okay. Also, the fact that they did not make any change to their FY24 loan growth guidance, right? They continue to have a guidance of 29 to 30% for FY24, and they are confident of continuing their growth momentum in the second half of the fiscal as well. How would you read into that? Were you expecting any change in the guidance at all? And do you think they'll be able to meet this kind of growth target?
Yeah, so look, first half has already set up a strong beat, a strong tone for the remaining part of the year. And given the fact that Bajaj Finance has called out apprehensions in smaller ticket segment way ahead of time, they have identified the problems they've been provided for. If you remember the con call, Rajiv Jain also mentioned that in the personal loan segments, Bajaj Finance has seen steady state market share of 7 odd percent for past 2 to 3 years. So I think they are ahead of time in recognizing apprehensions in the unsecured or personal loan segment. The growth momentum remains strong with all engines firing across product portfolios, plus the productivity going ahead is going to compensate and help trigger the growth prospects ahead. So 29 to 31% growth is very much plausible.
Okay. Oh, all right. On that big base as well. Shweta, before we wind this down, we have Hudco that's come out with an OFS, and that stock has gone up considerably. Any view, at around 79 rupees, our retail audience would like some bit of advice if you could help us out.
Well, yeah, so given the kind of raising that is happening, we believe Hudco is very much at the position wherein things are looking strong, both from the growth as well as the return profile now. And I think it's the right time to sort of, raise money in the market. Housing finance is at an inflection point. So brighter prospects for the company ahead.
But at what valuation would you give it? I think it trades at around 1.2 times trailing price to book.
Yeah, so see, even if I compare it with the entire HFC space, so 1.2x still looks attractive, with the kind of growth trajectory we see for the company now on. So I think best of days are still ahead for Hudco, and we believe it sort of should climb at least to 1.5x. So yeah, we remain positive on the day.
All right, Shweta, thanks very much. Great speaking with you. Appreciate you joining in with that perspective. Thank you.